Feroze Azeez is joining us now, Deputy CEO of Anand Rathi Wealth. Feroze, hi, good afternoon. This is the talking point right now, right? I mean, it's a talking point in the market across the board. Everyone's wondering, what happened and, how deep the rot is. And there's always a temptation of painting everyone with same brush, right? But you tell us, from the mutual fund investors' point of view, I think today there's been a lot of requests for redemptions as well. How are you viewing the current situation?
Good afternoon, Anuj. I personally think that if we see episodes like this as a mutual fund investor, to my mind, which I am, of course, my confidence goes up dramatically because the regulator is watching every action and is ready to transparently investigate and bring it to the foray right away. So point one is it reinforces that the regulatory watch is very, very minute, point one. Because front running is marginal price difference. It's not an underlying which is in question. Like when it was the Franklin case, which you actually alluded to, where the underlyings were absolutely liquid and the fund manager couldn't sell them. That's a very large problem. Here, front running has happened, which is definitely something which there's an alleged investigation also happening. We can't conclude it today. So point is, mutual fund investors should get immense confidence that there's somebody watching your money. Now, I was speaking to a friend who deals with crypto. He switched between two wallets, lost 8%, nobody to question. Somebody trying to sell a crypto, for example, and is not able to sell 20% value differential between the time he wishes to sell and what time he actually ends up placing the order. So regulator actually has been very vigilant, point one. Of course, the Franklin case, Sumera actually highlighted on 29th of March 2020 that there is a liquidity problem. In one of the shows, we did that. So point is here, in this particular case, it is not the problem of the underlying. It is the price debate, which is already factored in the NAV. So there's nothing much to be factored in, unlike another case where the underlying is an issue. So NAVs would have already had that detriment, if at all any, because you're speaking of front running, which implies that the underlying was bought at a worse off price than what it could have actually been in the NAV.
Feroze, so when we have, good afternoon, Prashant here, when we have corporates, right, company managements, I mean, senior KMP sort of quitting, investors ask, right, I mean, what happened? Why? And there are all kinds of doubts which are expressed. Why is the CFO out or the CEO out, suddenly abrupt, etc.? Here is a money management firm, and the only thing we know from them at this stage is that for 7 schemes, fund managers are changed. I mean, come on, that is not. That is not adequate, surely, right?
Definitely, Prashant. I completely agree that if you're managing public money, 1.5 lakh crore, there's more explanation needed. But I think with time, it should come from any rational organization which is constructed with processes. It will come through. That's my hope. This could be the first step of it. Point one. Point two, I think when investors ask this question or any market participant asks this question, there is one thing which we should all keep in mind is what's the action which emanates from that information. So I personally, as an advisor or a wealth management firm, we have a 3-step process to take a decision with respect to any such instances which may emerge in the future or have emerged in the past. So those 3 steps is what we follow to see whether an action is needed today, a knee-jerk reaction needed today, or it can wait for a month, 2 months for investigations to conclude to have some decisive moves as an investor, because that's what ends up mattering, not information. Action ends up mattering. So we look at 3 things. Let me categorically specify that. Prashant, the first thing we'd like to look at is it a price debate or it's an underlying
No, Feroze, just 1 minute. On that, I wanted to ask you, on that, because you said, but how do we know it is just the price thing and it's not... I mean, I'm not speculating here, but we don't know very much, right? Except what is being, what was through these columns and without naming people, because we don't know very much from the people involved what exactly is the wrongdoing about, the exact mechanism of it. So we are assuming things right now, aren't we?
Now, let me clarify. I might not have articulated it reasonably well to you. Now, you also saw all the top holdings of the 5-7 schemes where fund managers have changed. All these are absolutely liquid stocks. The price discovery is as perfect as it could get. So the NAV impact of these, if this was a small cap scheme with 5 most illiquid stocks as the top holding, then I would be saying that the underlying could be in question.
Basically saying that if you wanted to sell it, you could sell these stocks, right? They're very liquid portfolio. So investors can be made whole again if it came to that. That's basically what you're saying. That point I take. Go on, Anand.
The point, yeah. Got that point. I think, Feroze, what's also happened here is that a lot of this perhaps has happened at the time of the lockdown and when, people were working from home. Because, we all know that there are some stringent regulations in place in mutual funds, but perhaps that was a bit lax during that, 6 months or 1 year period when everyone was working from home. You had access to multiple phones, which is not the case when you are in a mutual fund dealing room, right? You're not on recorded lines. And at the end of the day, I mean, come on, even if it's a liquid stock, at the end of the day, and some of these stocks are available in futures as well, if you're doing an intraday trade and just settling that, that's a huge amount of money that you can make. I mean, without anyone even noticing that, you've seen the stocks move. So there should be a bit of a probe here, right?
Yes, Anuj, like you said, there were lockdowns, and if due to unavoidable circumstances, if the industry is went through a paradigm shift in its operation due to COVID, there would definitely be some time where the technology can catch up, the security systems can catch up. So there could be lapses, I'm not guessing that, but definitely an external factor like COVID would have forced the entire environment to change more rapidly, surgically, than transition and evolving. So that could be definitely one thing. Second is the fact that such minute things, like you said, Anuj, because the volumes are so large, intraday trade or anything can be there, but such minute things being caught and investigated is a certain degree of calmness for me as a mutual fund investor, to be honest. Third, I think it's important to also understand that it will emerge. Media houses like yourselves are going to track this for the retail investor. My only humble submission to an investor is if they have crores of investors or lakhs of investors and have built 1.5 lakh crores, there must be something which is right they would have done. So is it an institutional level allegation or is it individual level allegation? At the face of it, it looks like an individual level allegation. And if you look at the context, it's a bank promoted asset management company. So I, as an investor, would say that today, do I need to take an action? The answer is no. Will things unfold? The answer is yes. Will NAV have an impact if there is a run for the money in the funds? To my mind, not as much, because these are not small funds. If an asset management company can create an ELSS scheme, which is the largest India's ELSS scheme, has inspired confidence over the years. Access Long-Term Equity is the largest ELSS scheme where you lock in your money for 3 years. So there will be processes. I think investors should not take a panic action because the underlying is not in question. Unlike the other examples.
No, I take the point, and I think Nigel, Prashant, very valid point. You can't paint everyone with the same brush. And to be fair, even Axis Mutual Fund, some of these schemes have done really well over the last 2 years and have made a lot of money. So I think that point is taken. Nigel,
Feroze, just one quick point. Do you think that money, investors, when they're looking at it, we're just developing an equity cult here in India, and then suddenly, these sort of things, they create, a bit of a sour taste. But the point being, do you think investors now will rather opt for maybe a passive managed fund rather than active managed fund? As it is, most fund managers having a bit of an issue trying to keep up with the index. Passive managed fund, I mean, then some part of this gray area goes out. Your take.
So Nigel, you're absolutely right. It is definitely a dent on sentiment, especially given the market context over the last 6 months. Market is not at its peak, which it has touched in the past. There has been uncertainty. There has been rate hikes. So there is a lot of information which paints a gloomy picture. In that, this could be one nail in the coffin. So, but having said which, this is not the first time something has been probed of this nature. In the past, it has happened with large asset management companies, and things have still been very good from a perspective of regulation being at the epitome. From a financial common investment scheme. Mutual fund is a common investment scheme where crores of people come together to give a professional the mandate. So I personally think this could have a momentary dent on the sentiment and certain degree of sour taste in an investor's mouth, especially given that he's not making too much money over the last 6-8 months, given where the markets are. But I think we will emerge as an industry. We have crossed that bridge. It's been the industry has been privatized in 1992-93. It has become a 40 lakh crore industry currently. And such episodes definitely are not the most pleasant sight from an investor standpoint. But as a media house, you're doing a great job to keep a track and give information so that better decision making and prudent decision making happens.
Got it, Feroze. Thanks a lot for your time today. I'm sure we'll have more conversations with you on this topic for some time now. This is turning out to be into a big issue.
The point is that we need more information.
Yes.
At this point, we just don't know, because all we know from the entity is that
2 funds managers have been replaced.
I mean, the 7 schemes, right?
Yes.
7 schemes. So that's all.
Yes.
So it seems like a very routine thing about what has been put out. But I think, as Feroze said, that eventually we will know. They will kind of explain, and I don't know how this proceeds, but I think we will know as time goes by.
The point is valid, but I think Feroze makes a valid point as well, that these are not illiquid stocks like cash stocks.
No, that's not the point.
But the point is that I dare say that sometimes front running is easier to do in some of these stocks without being noticed. In small cash stocks where you have very low delivery volumes and all, if you do front running, it's visible, it's noticed. If you do front running in large stocks, liquid stocks, and especially if they are also available in F&O, you can do it without anyone even noticing it. So
my question is it what you mentioned, is this front running, or is this something?
We're not saying anything, of course, right now.
Because if the numbers which are being floated around, again, this is all out there in the realm of speculation right now, right? I mean, I wonder if the numbers are anywhere close to what is being spoken about. I mean, how do you do that? Those kind of gains with picking pieces basically ahead of essentially executing orders for the fund or whatever, right? I mean, so that's why I'm saying we need more clarity.
Yeah, I think Feroze will, he has told us that we will be tracking, so we will be tracking that story as well. As and when we get more information, we'll keep bringing it out to investors. But the point that Anuj made as well, some of these stocks, Nimesh just covered them some of these schemes, these 7 schemes, well, fairly liquid stocks as well are part of it. Some of them should flash for you on the screen. Very, very liquid, most of them actually as part of these schemes. Well, we've gone on for a goodish bit about that. For the time being,